Hi, everybody. My name is Shane. I work at 10 Capital Network as the events manager. So we have a great session for you today on go-to-market strategies with some of the guys from Founder Advisors. Just a reminder to everybody in the audience, if you have a question during the session, we'll be happy to answer it. Just put it in the chat box and our moderator, Hall, will get to it. So Hall, I'll let you take it from there.
Great. Thanks, Shane. And want to thank everybody for joining us today. And today we have a very special guest from the Founder Advisors, both Roger Toennis and Mitch Posada, going to talk to us today about go-to-market strategies. And we talk with startups every day that are going into the market, they're raising funding, and those who have a really strong strategy tend to do very well. Those who don't have a very good plan sometimes struggle. And today is going to be about how to put together a good go-to-market strategy. And we have a great turnout today. So I think this is a very timely topic for most of our entrepreneurs. But with that, let's go ahead and pass it over and have the speakers introduce themselves. Roger, can you kick off and tell us more about yourself and your background?
Absolutely. My name is Roger Toennis. I live in Boulder, Colorado now for the last 30 years after having done my master's work in electrical engineering at the University of Colorado Boulder for working for NASA as a research fellow. And then spent years at places like Lockheed Martin and Bell Laboratories and doing startups, and I did a stint at Gartner in recent years to advise startups. And that's kind of what got Mitch and I together. And Mitch can talk about his background. But we decided we wanted to help startups out in a unique way. And so we're all about startups all the time, helping our founders execute on the 167 things you're thinking about every single day at every moment, even while you're sleeping. So that's a little bit about me, and I'll hand it off to Mitch.
Thank you guys for having us. A little bit of background on myself. Been doing the entrepreneurship thing probably since 2000, on and off again. Started in the Valley. Mostly product and business development are sort of my key backgrounds. And so go-to-market has always been sort of a pivotal piece of my career experience. So looking forward to having this dialogue with folks. So I'll leave it at that. We'll get going.
Great. So I think the first question I always like to ask is, what's the biggest mistake entrepreneurs make in this area? You guys have a lot of experience there. What have you seen as the biggest thing that they do wrong? Roger, what's your take?
You know, it's such a hard question, but it's one that we think that we have an answer we like. And it has to do with not product market fit necessarily or on its own, but it's really about getting clear about delivering value and how do you go to market and tell the story to the people that are going to care about you and your product or service. How do you tell the story in a way that convinces them there's value, right? That's the outcome. Partners, customers, they say, wow, you're going to deliver value to me. Well, that's the core, that's the frictionless surface you want for go-to-market. And the thing that most of us, especially us tech types like us, and Mitch and I are engineers, is we think, hey, if we build this cool tech, they will come, like the field of dreams. And I think that is the biggest mistake. And it's almost a mistake that really doesn't get a lot of press. My technology my solution is so cool, my idea, my vision is so powerful. That will convince people to sell. And vision never sells people, right? The sale is when people write a check, right? And so the go-to-market strategy to get people to write a check. And one of the entrepreneurs that I dealt with early on 25 years ago, David Brown here in Boulder, told me, I said, what's the most important thing for a CEO to do? And he said 2 words: sell something. I'm like, okay, well, what about building the product and all of that? And he's like, well, of course, but the number one job of a CEO is to sell something. And I said, well, we're not done yet. He says, doesn't matter. You should be selling something before you even have it to offer, right? You're the chief sales officer. You're not you don't have enough money to execute yet. So that's in short, I guess long. That's what I think the biggest mistake is: underestimating and underappreciating the importance of a go-to-market strategy, literally almost from day one.
Yeah, I'll concur with that in the sense of.
Great. And Mitch, what's your take on that?
Yeah, I mean, I love it when founders sometimes have a stronger go-to-market. Go-to-market just tends to be sort of at the end and just like, give me the money and we'll figure it out. Not enough effort is put into the go-to-market. I think you almost need to think about building the business and the market and product, unless it's super deep tech, often takes too much precedent. And not enough is done to really understand, you know, which of the segments to be targeting, how you're going to close them, you know, how are you going to get in front of them, how are you going to sort of build the business independent of what the product is. So echoes Roger's sentiment. And I think there's just too much effort on the product, and then this hope that just the investment's going to help us figure it out. And I just got to a mistake would be, I just got to put a body there. I just need a salesperson or some marketing. And it's sort of like the product is the number one thing. And to a certain degree, there's some validity to that. But I think if you could put as much effort as you put into the product, into your go-to-market, you're going to do way better. And I just think it's a lot of work, but I think folks who spend as much time on that and then doing the trade-offs there, because that's sometimes where you do find some of the trade-offs are at that point in time, and where you have to compromise on vision, you know, to a certain degree to make sure that you are hitting some milestones, since we're probably going to talk a little bit on the investment side, so that you're hitting some, so you're like, okay, you're proving to me that you're what you have is going to have some validity in the market, and you're going to be able to get and hit those numbers that you're probably potentially describing, depending on how early you are in your capital raise. So that's it. That's the main, not enough emphasis on go-to-market.
And let's break that down. How do you walk people through building a go-to-market strategy? How do you take them step by step through so they have a more cohesive plan when they get to the market? Roger, what are some steps here that you walk through?
Yeah, that's a great question. And hopefully you're hearing me. I heard a little break up there, but the process we take people through is what we call a go-to-market assessment. And so what we've developed based on our experience and background is we have developed a scorecard for go-to-market, where we walk people through a specific set of questions and interviews, and then we give them a score. This is where we think you are relative to where you should be. And we score people on a scale of 1 to 5 on these different areas. And a 1 means you're way behind, a 5 means you're way ahead, and 3 means, hey, you're about where you should be. And so what we do is we bring that scorecard, compare it to compare you to other companies around go-to-market that are at a similar stage, because that's really important. And so that's the approach we take. So we really break it down into a process, instead of just saying, okay, let's throw good ideas against the wall. And oh, well, what if we went to this channel partner, or what if we went into this segment, right? You know, theoretically, it would look like this. So we also have in our network people who have been chief sales officers, chief revenue officers, people responsible for go-to-market, both in startups and in large companies.
Yeah, I could probably deep down a little bit further on some of these, Paul, if you don't mind.
Go ahead.
So there's basically 8 categories. You know, how your why, how does that meet the prospective client's needs? So like, kind of what gap are you satisfying? And then we do an assessment around your target segments, because that's usually where you can maybe make some pivots and there's some changes. Are you SMB, mid-market, enterprise? You know, kind of where you envision yourself, percentage of sales to each one, and then really get them to getting the founders to really articulate what's their interpretation of the sales cycle based on the segment they're going after. So there's a whole sort of deep dive in there. We do get into like pricing and how you're structured, so that you can kind of envision, is it a transactional, is it SaaS, is it annual, how are you doing discounts to sort of make sure that you're hitting the cycles that you want, and the churn. And sometimes there's just you do want it simple, but sometimes just even a thought exercise going through there, you can then see how you're going to need to pivot as you start getting more validation, so that you can scale. And then we do a deep dive as much as we can in terms of like the assets that you have. to make sure that that sales close and even your sales organization structure, how do you have that? And you don't need to overbuild it, but you do need to kind of know where you're heading. Some of that then ties into customer acquisition costs and which markets you should be going after and what's the sales price. And then deep diving into the client onboarding. So there's another area that we do, just how do you manage client or onboarding MVP? And we use similar, sometimes use similar terms. Think of your client onboarding MVP, because you kind of have to like get better at things over time and then figure out where your resources and allocate. So we just try to get a sense and give you a assessment. Okay, your onboarding is probably on par for the market you're going after, the segments, given where you're at, given your resources, that's probably enough. But then know that we may need to revisit that as you start shifting your segment or prioritizing or getting the right resources for that. We then do a team sales assessment. You know, are they overall revenue number? Like, how are you managing that? And then what a CRM? What kind of KPIs that are good enough for where you're at now? And then sales elevator. Like, what's your pitch? You know, and then where's your longer one? And what are those discovery call scripts? So that you kind of, versus saying it and you have the right person in the room. No, we want to see like, okay, if you have all those stuff, then you're going to get a better score. If you've just thought about it and you have the right people and you have the experience, you're going to get a lesser score, because a lot of that changes as you start actually doing it, when, you know, rubber meets the road. And then how do you close the business? Like all those sort of scripts that you potentially need to have to by persona type and given where your need, how do you manage those things? Because sometimes you just do need to close, you need to get some traction. Anyway, so we evaluate, and then as you start scaling, the customers are probably going to be very more structured, and then it just starts to look more repeatable, scalable. So we try to give you an assessment based on where you're at and type of business you're at. What do you need to figure out? And that's super very helpful. And that's you typically with founders maybe underestimate all those nuances, which are almost as much as a product itself and or the team and how you manage it, just with the go-to-market. Like there's a lot of levers that you may need to adjust. And so we just try to give a clear picture of what that is and what's entailed and how much time and effort is going to entail to get you to where you need to be. You know,
Mitch,
not overdo it.
Yeah, Mitch makes a great point. I think they're summing it up and saying, getting your go-to-market strategy ready is almost more complicated. And I think it is, in general, more complicated, more to do to get it right than even your product. Now, your product should be an MVP. Your product should be simplicity. You know, Da Vinci said, simplicity is the ultimate sophistication. If you're an early stage startup, it damn well better be simple, right? Because all this other stuff that Mitch just talked about, it is complicated and it's hard. And if you don't think, you know, sales is hard because you think, hey, if you build great technology, it sells itself, then that is, in my opinion, one of the biggest reasons why 90+% of us fail at our startups, especially as tech folks like us, because we underappreciate, as I said earlier, the power of a well put together go-to-market. Because, you know, another little nuance to add to what to what Mitch was saying is, you know, you need to know what technologies are being disrupted internally with that customer when you bring yours. Like, what are they going to stop using because they're going to start using your stuff? Okay, and know that there's friction there because there's people that are advocates for that old way of doing things, even if your way is better, right? So all these little nuances, if you start thinking about those early, and what it does is it almost forces you to simplify your product, because you think, oh my God, if we have too many features, all this go-to-market stuff is going to be so much harder. So I think go-to-market first, product roadmap second, right? Discover who you're going to sell to, you know, who the personas are. If you're selling into enterprise, I mean, we're kind of enterprise experts in selling into enterprise. It's complicated. There are multiple stakeholders you need to think about if you're going to sell into enterprise. And that's why one of the things we often do with early stage startups is encourage them to go SMB or at least mid-market.
Great. Thank you, Roger. Go ahead, Mitch.
No, I was saying, does that make sense, Hall? If you want to make, you know, or if you want to chime in as well.
No, I think that makes sense. I think that's giving good description. We do have a question in the chat box. It says, consumer and purchasing agents are smarter today and don't typically subscribe to vaporware. How do you recommend overcoming this? What if you don't have the product actually ready to ship, but you want to get to market for investment reasons?
Great.
Yeah, that's a great question. And what you have to do is bypass I call it bypassing the gatekeepers, right? Number one is you have to get really clear of who is the person in that organization, especially in an enterprise. Who is the person who's set to look good as a result of the adoption of your technology, right? An influencer, and the people in front of those people are often these purchasing agents, especially in enterprise. And so the problem of trying to sell vaporware, and the way you have to do that is you've got to find these people and you have to get them to talk to you, right? And a lot of times double E's like me, and you can't spell geek without a double E, are introverts and are a little scared about the idea of going and talking to people. But having conversations with the people that are going to benefit personally in their job, in their business, because your solution is going to do that for them. They become your advocates over and above the purchasing agents. And then be honest, we are vaporware. We're not there yet, right? We want you to be a beta. Would you join our customer advisory committee? And you're going to get a lot of no's, but not as many no's as when you start selling, right? People like to be heard. So go find the influencers at your ideal customer and the ideal personas there, and enroll them, do the people work, right? Put together a board of advisors early. A lot of the research notes I wrote,
customer advisory
yeah,
board.
the customer advisory board. A lot of the research notes I wrote at Gartner for companies, big companies don't do this very well sometimes, but certainly for the startups that I was advising, was put a customer advisory board together, almost from the beginning, like when you're in concept and you're raising from friends and family, right? Then you think, oh, but I won't be able to write code or design circuits or do whatever I need to do. Again, you're just making your life harder if you wait to the end to see if you built what will make them come and buy.
Yeah. So I'll also answer that question. If you think you're going to go to market chasing a purchasing type buyer, you probably need to know how your 10x, like your product needs to be way more like able to sell to that, which is typically why I say find the early adopters, which is, as Roger was mentioning, is probably more the influencer who's going to just make sure that the purchasing agent makes an exception in some fashion. Sometimes you have to be, if you're doing more enterprise, you have to be go through the whole hurdles and hoops of making sure you're a registered vendor, etc. But if that probably helps signal you, as much as your initial vision might have a certain segment or a certain market, you may need to then find that's not your early adopter market. You need to find the folks who are going to champion you because you're not fully flushed out. But if you are fully flushed out, I mean, that is a good indicator. Well, we sometimes also then look at, okay, so are these the folks, the early adopters, or you're already targeting because it's super simple and it's just, there's very little decision making and you're almost just like a SaaS purchase and it's just a credit card and you're just making it low enough that, yeah, a procurement person can make the decision. But that's a good tell to you, the founder, how well adopted you are on who you picked. If you have to go through the sort of a consumer or procurement that wants to see it all finished, you're probably not finding that's probably not the right segment to go after initially. Let me see what else.
Yeah, there's some good questions in here that are coming up.
But be very transparent, and then try to just get, even if you do find those people, try to get them to commit to when we're ready, or what is it going to take to get them, find out what their requirements are. So then you kind of know where you're stacking up. And then often that helps with the product roadmap, because you'd be like, okay, it's just doing customer development. You can narrow down what the product feature set needs to be and focus on the influencer, and then switch to, we need to have all these other things ready. So it's a good dialogue. It's good. It's not a waste of time, but then it helps you quickly figure out segmentation is probably a bigger thing that you need to solve, is my sense, given the question.
Great. So our next question is, what's your experience with enterprise trial or pilot to initiate a sell? What's your experience there?
For me, it's everything. And the follow-up question there, I think, is appropriate as well, which is, do you want, there was full featured versus simple. You want simple. I always say, make them ask you for more, right? Because then that's when they start to get greedy for you and pay more attention to you. Sell one thing at a time early on. If you've got if you're targeting large enterprise eventually, think about growing up into large enterprise, which means think about what are the businesses in the mid-market, smaller versions of those enterprises that you think are ideal. They're going to have a lot more flexibility, a lot more ability to kind of break rules. So keep it simple, focused on a value, a singular one or two, small amount of value that's clearly there, and it's easier to sell. Obviously, the simpler something is, the easier to sell. And so I would say target for those trials, those betas, right? And if you get this customer advisory board going, influencers, people who like to be on the bleeding edge and give input on what your technology should be to make their life better, you can find those people and they become your advocates inside the company. So yes, keep it simple. Be honest about how early you are, how alpha you are, how beta you are, right? Be very clear and upfront about what you're going to deliver and why it's important to that person. And then, believe me, if they decide they like what you're doing, they won't criticize you for not having the things that they now want. They will just tell you. So that's my answer to that question. I think it's really important to get, because if you just start throwing darts against the wall with all sorts of features, hoping that, well, if we've got all these features, they'll pick one of them. Now, the chaos makes it hard for them to pick any of them. So keep focused.
And I would say that the less you sell, the more you start to figure out what is the most important thing and where you should be.
Exactly.
Any more your engineering resources or sales prowess around, and then building around that. And then that's when you may have to go back to segmentation. It's like, it's all over the map, or these people like it this much, and these are ultimately the better client and or the pricing that suits our business model. Again, back to the whole go-to-market. So it's good to have the good. It's better to have. I do think it's better to have less. And then you have to create value within a year or less. You're never going to get an enterprise to be like, okay, 18 months from now, maybe we're going to get something, unless you're doing like aerospace. Because there are some rules that breaks, but generally, if you can't deliver value within a couple quarters, your pilot is not going to be super successful, or you're just not going to get it. You're not going to be able to turn that POC to a pilot to a rollout. So you got to figure out how many quarters is it going to take to actually deliver enough of that value that they're going to be happy to continue the conversation and move from pilot to something more. So again, potentially that means lessening the immediate value and getting them to agree. Okay, if you can do those things, that's great. And then we want you to do these other things. Otherwise, they're not going to be as satisfied. But the pilot, that's what helps the pilot figure that stuff out. But yeah, a couple quarters max.
Yeah, and to add to that, what I would say is, don't just think about your product and what it does for them. Think about proposing to them a 1 or 2 quarter plan for the delivery of value, and say, all right, you're the sponsor for this pilot or proof of concept. Here's my rough outline of what it's going to look like. We're going to roll out with this many users in the beta. We're at this date, we're going to take data and review, 6 weeks in, we're going to look at it and review with you. And then 12 weeks in, and at the end of this time frame, we will write a report with you. And then you can use that report with your powers that be at the enterprise to say, okay, this is what we've learned. So it looks really professional. And you're actually, even in some sense, almost coming in like a consulting firm. So there's a little consultative angle to what you offer. If you walk in feeling, and it feels like a consultant, believe me, the enterprise folks, they're used to dealing with Bains and BCGs and Deloittes and McKinseys and all that. They use them all the time. So if you, as a startup, have that consultative approach along with your innovator approach, they're going to say, okay, this is like the best of both worlds, right? Because I understand how to deal with BCG or Deloitte consultants that are really great, and they've laid out a plan for me. And oh, by the way, they're a startup, and they've got a simple value proposition that makes me look good if the report shows that this worked. And then it's easy. I've been on the other side of this in the enterprise where I'm bringing companies in. I want to look good to my boss, my VP or my C-level that says, hey, Roger knows how to go out and find startups that aren't going to make us look bad. Because that's the other thing that they're worried about. They're worried about bringing you in and then you fall on your face. And then that person who brought you in looks terrible to their boss. You got to think about the human impact that you're going to have on these people in the enterprise.
Right. Yeah, next question is from someone with a B2C app. What's a good cost per click or click-through rate for a B2C product on Facebook and Twitter? When you're going to market, it's online, what should you be looking for at this stage?
B2C, we're more B2B folks, but we do have some B2C. Mitch, do you have a comment?
Well, it's going to be low.
It's going to be low.
It's going to be low for cost per click and through rate for B2C, Facebook. I don't know what the current, and then different categories have different, because sort of the price point and the sales cycle. Wow. I haven't had to answer this question in a while.
I mean, quantitatively, what I would tell you is you probably Google and get those numbers. What qualitatively, what I would tell you is it goes back to what I was saying about simplicity. And the other thing is knowing your customer, right? If you're B2C and you want something to go viral, you're going to have to understand your ideal customer persona. You're going to have to do the legwork up front, to do the customer interviews, to validate the value proposition in a world of B2C. Because the world of B2B, in terms of available technologies for a B2B buyer to buy, is huge. But B2C is even ridiculous, and the chaos that we all deal with in the world of B2C. So again, focus.
For the B2C, I would also say you gotta talk to the initial customers, just like it's before and after, so you really kind of validate versus assuming that the ad or whatever assumptions you might be making are actually accurate. So, and that's a ton of time, because who do you assign to like call new customers? But you should definitely do that so you're not making assumptions. I did see another one for full feature versus focus feature for a department. I've seen it better to pick one department, do really well because they're a referenceable one, and then you can and try not to even make it as full features as you think you need to, but enough where they're going to be super satisfied, because they will get asked by whatever other department you're going to be going to. So you just make one person happy instead of trying to date two and not do a good job on either.
On either one.
And then because then your team might not know what's trading off, and so then you have to be trading off internally, and so you might get it miscommunicated even internally as to what the priority needs to be. So that's generally how I've seen it, unless you already kind of know where we have to get to a different department, and we just need it's usually strategically and an insight into that customer, and if that customer is going to be similar to other ones, you may have to figure it out, but generally one at a time is better. And
I mean, just to add to that, I agree with Mitch 100%. When I was at Bell Laboratories, I had a boss who would always say, you can't try to boil the ocean, but you especially can't try to boil all 7 oceans at the same time. And I think, you got to boil one pot of water at a time. You can have a vision for how you're eventually going to boil all the oceans simultaneously, right? That's kind of in the nature of the innovator. But be patient, be focused, be an innovator, be evangelist, but evangelize the value to them, not the excitement that you have about what your company's going to do, but what you're going to do for them.
Yeah, I see some other sort of follow-up on the consultant, but Paul, you tell us where you want us to go.
Sure. The next one up is, and we'll come back to this topic here in a moment, but for pre-revenue startups talking to investors such as VCs, we hear case studies, testimonies with intent, pipeline. What should they be pitching to them without revenue? What's your top preference?
Yeah, we have that a little bit, Roger, one of your aerospace clients with Aphelion, like the letters of intent, like we break out the revenue for well, you're talking about what prioritize for the conversation with the investor, correct? Did I hear that right?
That's right. What do you tell the investor to convince them you have traction when you don't have revenue?
Yeah, you get that, Roger?
Yeah.
How do you convince investor
Yeah, I mean, it's to your point, letters of intent, letters of support. Those things are from enterprises, especially in like the client that we have that's a launch vehicle company, aerospace client. Those carry weight, and so whatever your particular area marketplace is in focus is, if you have a clear idea of who your customers are, and you go do a lot of what we were talking about, and then you actually have a template, which we help our clients with that. What's a good letter of intent, a letter of support, a letter of commitment, right? If you can get, a contracted, legally binding letter of commitment, but you got to make it easy for them to do that. And in many cases, you'll be surprised. They'll do that because the amount of budget that you need to do that proof of concept or that pilot that they're willing to do if you hit a certain milestones is not that big. They'll run experiments, and they have budget to run experiments. And so you just got to make it easy for them. Okay, here's the experiment we're going to run. Here's our product. Here's what we'll do. If you sign this document, then what that does is it helps us raise money. And in many cases, these big enterprises, they acquire companies, right? So they know that if this all works out down the road, that you might be somebody that they acquire in some cases. So letters of support, letters of intent, and letters of commitment are really important. And if you've got signatures, you can show those to the investors. And guess what? Less than 5% of startups do a good job of being able to lay a letter of intent down in front of an investor that looks like a professional letter of intent or letter of support or letter of commitment. So this is another area that you maybe, if you're an entrepreneur and you've been dealing in tech, you're not used to this kind of stuff because you haven't worked in the biz dev side of things.
The other thing I've seen people see is try to break down is, even if you just do an anatomy of a sale and just say, here's how we go from letter of support, letters of intent to an actual contract, and or how the revenue path might grow, how you're doing it, if you're doing kind of land and expand. But you need to at least illustrate it through one. Ideally, it's a real one that you have, so that they see that sort of when you start showing financial projections, that they can sort of envision good, they can kind of sort of see where that revenue is going to be coming, because in a lot of cases, some people are just like, no, even an existing customer is going to get way bigger faster than just, it's not like a flat line. We just need more customers. Each one is doing this, whereas one customer can add. So if you have that situation, you want to illustrate it, because then they'd be like, oh, so it's not just customer count, it's just how fast they can raise the revenue projection within it, if that's the dynamic you have. So make sure you illustrate that. But I think being as frank as you can, and then showing your plan of like how much outreach you're going to be, like how fast are these things going to convert, and give them that sort of that sense of you have the game plan. Again, this is why go to market is probably one of the more just as challenging, and I think people don't have as much time to be able to articulate it, even just on a conversation with an investor. When you have several different answers versus a more generic answer, it shows that you've noodled how you're going to get revenue in the door, and how you're using those early customers to get more customers and or more into that customer. And they love that shows signs that, especially if you're more than the engineering type, or you have an engineering led product, they're like, okay, great product, but they can't sell it. And that happens a lot. And investors are very weary of that.
Great. Next one goes back to a previous discussion. Being a consultant is an excellent point. For enterprise, you recommend a line item for this with a fee. This can help with their budgets and formalize the effort. Roger, what's your take on that?
Yeah, absolutely. I mean, there's nothing illegal about a startup saying, especially if you're somebody who's been in consulting before, like myself or Mitch, but even if you haven't, having the consultative piece be part of the product you're selling. And that's easier to do when you've got that simple value story for a particular, personas inside your target enterprises. So I am a fan of that because if you're doing this and you're an innovator and you're an entrepreneur and you know something that the rest of the world doesn't, you've got a better mousetrap, lean into that. What you think can be valuable, especially to enterprises, they're good at making sure they get outside advice, because they outside fresh advice from people who in some sense know the industry and are trying to push the industry forward. That's way more expensive if you buy it from McKinsey or Bain or Deloitte. So if you've got the personality and you've got the knowledge and you've got the background to be able to come in and be consultative, add that to what you're charging for. And that proof of concepts, we've got a client right now that's a hardware robotics company. They're selling proof of concepts, really, pre-GA, and they're selling them for $20,000 to $30,000 for a proof of concept. And this is like a week-long proof of concept where they come in with this robotic capability and they show how they can do video with this snake robot. So he's getting, it's easy for them because the budget for $20,000 or $30,000 at some of these very large target enterprise customers is there. And then there's low risk, right? So if I'm inside that company and I'm bringing you in and all I need is to get $25,000 or $30,000 for a POC for something we really need, I just say, hey, this is it. We're running this experiment with this startup. Could be good, could be bad, but here's why I think it's good. Let's do it. And, my VP or somebody would say, okay, yeah, we got budget for that. Let's do it. So, start getting the revenue in the door with any value you can deliver.
Roger, this is sort of like the prize inside where you kind of like mask the product and we leave you with this nugget that's the thing that's going to track all the value that we created. Like, is there
exactly?
Is there how would you maybe characterize? So definitely, well, I'll be right. Definitely consulting. Sometimes you even show like how much of a discount you're giving the consultant because ultimately you're trying to sell the product, right? But yes, right. You're going to evangelize it for them because oftentimes the entrepreneur is super visionary or is probably the one doing the selling. He's like, look, no one's doing this. You're going to be the first one. This is a competitive advantage. But yes, I'll do some consulting because you have to sort of, that person has to evangelize it, but can't be evangelizing every single customer, right? That's why you do an, depending on how much education you need to do for the market, but you can do a consulting fee and even show how you're giving it a discounted. And ultimately you're trying to get to a product offering as one way. And then the prize inside, I don't know, Roger, you explain it better than I do.
Yeah, I mean, just to really start with what you said, is we go back to what I said about understanding what technology or what solutions you're disrupting and how much those things cost them today, right? So you need to know what their cost basis is today in terms of getting the problems that you're solving for them in a better way. How much they pay for it today? Because if you're going to be just as much, even if you're a better technology, more than likely you're going to have a tough road. So if you go in there with this proof of concept and you tell them, hey, if this works out, if you guys like what we do and we prove ourselves, you're going to save, X $100,000 per quarter per situation, right? Versus what we would charge. So show them right away the cost savings. And then, then you come in and you prove that you can do it. They are already seeing that, hey, if this works, we're going to save money, right? And so that's the free prize inside is you get them thinking, this is gonna improve my budget. This is gonna allow me to do more with less. And those are the kind of thinking processes, thinking tracks that enterprises are in.
Great. Next question is launching a series of targeted email campaigns in which they're actually using an iterative process to refine the subject line and core message. This personalized to increase open and response rates. Are you fans of this marketing strategy, and any suggestions or comments for those who are going down this path of using this type of marketing? Roger,
I'm a huge fan. Yeah, I'm a control systems engineer. Most of my stuff was in advanced control theory. And what you're talking about is a tight control loop, right? It's make a small change, see how it works, make a small change, see how it works, and do that in a systematic way. And work with people who do this for a living, and don't be doing what I call guest marketing. I think that this will apply. Get people together, get professionals who in messaging, and then also get tools that can dynamically modify and then react to open rates, so that you can in real time zero in on the optimal points in the marketing state space. So yes, in general, I'm definitely a fan. Obviously, the devil's in the details how you go about this, though.
Yeah, I would say that like this is where sort of like agile marketing and having not shortchanging like what the feedback you're getting from all those campaigns. You're doing like best practices, which is probably still similar to when I was doing it. You're doing all the A/B testing. You're really just looking at those things in probably 1 to 2 week sprints if you're doing depending how these campaigns are going out. And you spend a lot of time probably as a founder just alongside supporting that person and or team until you know that their experiments where they're headed and where they're where they're going and how quickly they're able to report back. And maybe that's also like, hey, there's a handoff. I just tell you what the campaign's doing, but you got to talk to sales because their sales process requires a phone conversation or a survey or something So you gotta tighten that, and and have it no less than a month sort of increments of where how much you're spending your time, and then not shooting huge campaigns when you probably start off, I don't know what the numbers are, but do enough to have a percentage. Is it 1,000? Is it 100? And then do micro until you start widening it out and doing more experiments and doing that. And then you kind of let that team go off and do it, because you see how they're thinking and how fast they're turning around those experiment data. Because oftentimes it's just these big chunks, huge numbers, and then months go by and you're like, okay, we should have pivoted faster. So do as much as you can, do week or every 2 week like experiments, because enough data to come back in to prove it's not just open rates. Anyways, that helped. And the founder should be very involved in that until you don't need to. So okay, you guys are off and running, because there's too many things to be worried about.
Yeah, really good point, because so many early stage founders try to lean into marketing spend, which is a great sentiment, but doing it randomly without any knowledge of what you really need and from the types of person. There's 100,000 marketing companies that'll take your money. And I've had so many of our clients say, "Oh, I wasted 25 or 30 or 50 or $100,000 on that, and we really didn't get anything out of it." And it's because you were not prepared to use marketing professionals yet.
Yeah, that's true. And so they're like, well, you got to tell specifically, we can only do so much. Anyways, the intimate collaboration is helpful, especially if it's external resources, which is often the case. It's oftentimes too early to bring on someone, because until you know the background or expertise, same reasons you might hire a salesperson too early. Their whole Rolodex is now half or completely irrelevant when you pivot to a different sector or a different, different segment. So similarly, why a lot of people use, and we advise on often using just consultant sort of support on the marketing until you nail it down.
So there's a chat thread going on that you guys can read as well, but it says, dealing with African governments, do they sign LOIs? Maybe a more general question is, do any governments sign LOIs? What's your experience there in getting government customers to sign those?
The thing about government is they are hesitant, because of, obviously, in a government environment, people are in sort of a CYA generally. It depends on the government. But again, it goes back to what I was saying about making sure you know the value and the cost savings you're going to deliver. Have a model that you can pitch. You're going to save this much money compared to what you're doing now, which is, this is what you're doing, and I know what you're doing. This is how much you're spending on it. If you do this, then it's easier for them to go, okay, you understand my problem. And I'm at a level in this government agency where I do have budget authority. And so that it's early. Find the people in the government and ask them the hard question. Do you have budget authority? If we brought you something, before I tell you about how great my tech is, if we brought you something that solved this problem that I think you have, or that you've told me you have, would you be able to assign budget for a POC? It would look like this. And the answer is yes or no. And if it's yes, then they can, because they're not at risk of signing an LOI, even a binding LOI. Right. So again, it goes back to knowing your customer, what their real struggle is, how much they're paying to solve that problem today, and how much you're going to save them if you solve it your way.
Yeah, the US is slightly different with all the money and grants, things that folks are doing. Maybe Europe a little bit. Generally, I generally don't remember seeing anything that's just not actually a binding contract. So I can't recall of an LOI off the top of my head. So
government.
I think Jeffrey had it on point. It's probably going to take you just as much effort just to get the freaking thing signed anyway. So just go for that.
Right. Yeah, and I think government lawyers, they're just trying to protect, really the agency, whatever it is, protect the people in the agency from looking bad. And so if you start from a position of, I need to make this person look good at this government agency, and it's the same in whether it's an NGO or a government itself, or a nonprofit or a for-profit. Everyone wants to innovate. Everyone wants to be the person who has brought in some cool new tech that solves a problem that wasn't solved before. But you have to understand, it's not just the upside for that person. It's the defense against looking bad or actually getting fired. So how is what I'm doing going to make that person, that persona, that decision maker, that budget authority person, how is it going to make them look good? Right. That's what you're there to do.
And they often have gatekeepers. Like, we're making an introduction to an EV company to the USPS because they need to have a more green fleet vehicle, sort of. But they have a very small team that's sort of the gatekeeper. But ultimately, they even tell you, like, the business unit has to see it clearly, and so they can only do so much sort of gatekeeping. You might be able to get, I don't know if they would send, that team would sort of sound ad, but they would probably at least help pitch for you. You just need to communicate to the investor, and they may be like, okay, that's enough. You have enough of those for me because I'm coming in early anyways, versus someone who's like, no, I'm a growth stage VC, or I need to see, no, come back to me when we have revenue. And that's maybe your decision making. But contracts, getting an actual contract is probably the better way to go.
Yeah, and we as investors, and with our investor hat on, we see hundreds and hundreds and hundreds of tech companies with cool ideas. What stands out to the investor, the professional investor, or even an angel who does a lot of looking at stuff, is that you're doing something different that they don't see the typical startup at your stage doing, right? So going back to our go-to-market planning, going back to customer advisory boards, going back to having templates for letters of intent, those kind of things, you're going to stand out, because everyone else is just pitching oh my God, rainbows and unicorns, my technology is going to change the world. Great. How are you going to get the first few steps towards changing the world? And show me that you're very thoughtful and operational minded. And that's, most of entrepreneurs lead with vision, right? Now you got to flip that and lead with execution, but in a very simple, confident but honest way. If you're early, if you're still doing R&D, let them know and enroll them in it, right? Because instead of being your adversary, they become your advocate when you allow them to co-create with you on what's happening.
Great. We have one last question that'll wrap up for today, because I think it's a good one. For SaaS, it sounds like you suggest for a go-to-market plan to use outside services for sales and marketing. This allows for more control in spending and adapting based on results. What's your take on that, Roger?
It depends, right? There's literally hundreds of thousands of outside sales and marketing. And so I think what the best thing to do is, before you go to a sales and marketing professional firm, you have to do the work yourself to come up with that core nugget. What is that tiny crystal of value proposition, right? And prove to yourself, use people from your network if they have expertise, or people on your advisory board, or advisors who have expertise in this. Prove that there's a customer journey and mission, messaging around your solution, and then prove it works. And then once you've proven that that one thing works, now you can go and take it to scale with professionals who know how to turn that into an automation, right? Don't go to the sales and marketing professionals to get that core nugget, because you know what? They'll just start with whatever you tell them, and then they'll charge you and just keep charging, right? Without knowing that story works first. So you've got to do the hard work of becoming a salesperson, even if it makes you uncomfortable, even if you're a deep tech founder like I am, right? You got to learn to put yourself out there and enjoy getting no's, right? Because the more no's you get, the faster you get to the yes. It's a classic old school sales advice. That's my take on it. Mitch, what's your thought?
I would concur. I think I put some comments in the in the chat. You can find some of these professionals. They just generally are harder to find, that are aware that you're trying to optimize learning as fast as possible. And so sometimes it's not about getting it, marketing just generally don't think that way. And so they have longer cycles, and they expect you to kind of know, and you give them. But you'd have to find someone who understands that you have to be hyper about learning. And it's not just learning about what messaging works, but how that relates to the feature set. Like, it's just like they almost have to think like a product person and understand your sales organization, or like your organization. And so that's why often the founder has to be like in the weeds. If you just don't know how to do the mechanics of executing, then that you should go get external help. But as Roger was saying, you do have to be the first one to figure out how fast and be in the weeds. And as soon as you figure out a nugget that then can go off and running, then have the external team go off and running. And then maybe you continue working with an internal resource, external resource, figuring out what are the new. Sometimes that one is not enough because that may be one segment or one persona type that has that you figured out that pain point, but really there's a couple that you have to uncover in order to hit the numbers that you need to hit. If that makes sense.
No, just to finish here on this is I said, you got to figure it out, but they're more and more now compared to in the past. And we worked with several firms that exclusively do messaging. Once the messaging is done, they're done. And then you go find sales and marketing to kind of turn the crank. Okay. So another thing to think about, if you really can't do it on your own and with your own advisors to get to the right messaging, and believe me, outside eyes on what your messaging is critical.
It's very
go
helpful.
Go get a messaging specialist and look for a messaging specialist that has been an entrepreneur, possibly a product person, whether they're an engineer or a product management, where they've had to in their own career prior to becoming an expert in product messaging, that they've actually managed products and taken them to market as a product manager. Those folks know how to do that. And then when you've got that awesome messaging and they'll help you test it, but they're not, they go on to the next company then after they've helped you get your messaging polished. And this is one of the areas that I think entrepreneurs underappreciate. You'll put some wonky name on your company in the beginning, with, numbers and letters and weird stuff in it. And we run across these and I'm like, why did you name your company that way? And how does this align with your messaging of the value? Right. And they're like, oh, well, this, and that. And it's like advanced calculus to figure out what you need is a professional messaging specialist who can help you tell the story of your product in plain speak language for the people who are going to buy it. And don't get cute with messaging. Right. One of the things that Gartner we used to teach and they taught us is you got to be punchy, pithy, and provocative at the same time. And don't overdo either one of those. It's got to be balanced. Right. You're there. It needs to be easy to remember. It needs to have punch and it needs to provoke the buyer. Right. Once you get to that, then now you can go find lots of people to turn cranks for you. And yeah, there's some stuff you need to be careful about, not getting the wrong sales and marketing scale partner. But if you've got the great messaging first, then that's going to make that next step a lot more effective.
Yeah, and so I'll echo on that. Like if I had to choose between someone who can execute campaigns versus someone with like expertise around messaging, which may may have to talk to customers and research. That's not generally not the marketing expert. You get the messaging and there are enough of that nuggets down with externalized, then you hire like, okay, well, how are we going to leverage that to actually then get people in my pipeline? I would do the messaging first. And sometimes it's more expensive than you want it to be, but it's better to have all the insights from that, even if it's, all the stuff you threw out, because sometimes that stuff you threw out, you may want to put back in because you were making some stuff, but now you have all this fodder that you have to give to the person if the marketing actually doesn't execute as much. But that is more money better spent because it's closer to what's actually going to move the needle. And then you're giving the experiment, the marketing team, like, hey, this is the main nugget. If you guys want to experiment in and around that, great. But now you have what we think is, as Roger was saying, a core messaging. And that is definitely worth the time spending to get an external. There are firms now doing more of that. Even some of the people who build product now have a whole different offering. And they do that first before they build you any line of code, because they want founders to be successful. And they realize that is usually where they mess up, is the messaging is not even right. So you're building something that's wrong, and then you're marketing something that's wrong. So you just spend a lot of money learning the hard way. Sometimes start with messaging first, like think
messaging first,
product second, even maybe, and then go into
totally value first, messaging second, and then product. Yeah, product third, value first, messaging second. I mean, Mitch and I have seen thousands of startups over the year with their messaging and their names, and don't be cute, right? Don't think, oh, this is a clever name. That's bad. Don't be clever. You can be provocative, but don't be clever. And if you get the messaging right, that is the thing that is the frictionless surface to sales, right? And building product as a product person, as an engineer, building product for me is easy. What I'm not good at is knowing what the value is. And as to Mitch's point here in the chat, thank you, Louis. Really appreciate your kind comment.
Great. Well, I think we're near the end of our time. I want to thank you, Roger and Mitch, for joining us today. Great information about go-to-market. A lot of good stuff in the chat box. I want to thank those who put in comments and questions. I thought those were very helpful as well. We'll connect everybody afterwards. So appreciate you guys taking time to join us today. And with that, we'll go ahead and close it out and looking forward to seeing next steps. Thanks so much.
Hey guys, keep up the faith. You're doing good work. You know, it's hard, but you'll get there.
Thank you.